Yo, what is good, family? Hope you all are having an amazing day. We're gonna break down the setup we had this morning on the Frankfurt Open with Eurusd. Again, another day we had a loss on Bitcoin on New York and win on Eurusd on Frankfurt Open. So again, we have a break-even day overall with the strategy, and I'm talking about this as scenario because we have another detail that is very important for you guys to keep in mind when trading this type of strategy. Now, as you have been seeing yesterday and today, break-even day, wins on the euro, losses on Bitcoin. That's what this is about. All right, some pairs will hedge others, or some days will both give the win, some days both will give the loss, and some other days like yesterday and today they will give break even. The most important part is every single day following the same plan, because at the end of the day, in the end, everything will balance out. All right, so it doesn't really matter. I personally trade both because I trade different platforms, different accounts, and so on and so forth. But I don't consider that for a new person it's fully necessary to trade two pairs, not even two sessions. You should be doing just your USD, Frankfurt Open, or London Open, or New York Open. Don't recommend New York Open because you have usually more red folders. And with Bitcoin, you can pretty much trade any session: Sydney, Tokyo, Frankfurt, London, New York, whatever. If you don't want to trade any of those two, you can trade gold, you can trade any other USD major pair, you can trade indices, whatever. But for a new person, it's not needed to trade more than one pair, not more than one session, all right? So let's kick it off with this. We have the Frankfurt Open, as always, at 8 a.m. and we're recovering it back with yesterday's example. Same candle that makes the high makes the BOS. Before going over that, first question, where are we coming from? We're coming from this bullish trend. Long story short, higher high, higher low, higher high, higher low, higher high. So this bearish candle first makes the high, then makes the low. Now, 8 a.m., we mark up the last high and mark up the last low. Now, this last high is a higher high. Therefore, we will be looking for a bullish rule of the third impulse. Do we have less than 3 impulses? No, we have 1, we have 2, we have 3, we have 4. This will be an entry to the 5th impulse. So the higher high is useless. Now, the last low. This is not a lower low nor a higher low, because for the lower low we don't have 2 impulses. For the higher high, for the higher low, we don't have a higher high, right? For this to be a higher low, we need to have a higher high. So this low is not useful. It's this one, all right? This one will be the valid one for what? For a bearish BOS. Now, opening candle, boom, there we go. The same candle that makes the higher high creates the BOS. This is not valid to be taken. In some scenarios like today, it will be a win, but overall, it's not the best performing model. Like I said, same candle that creates the higher high gives you the entry. That is not a valid model. In fact, when the market creates this higher high, you are eventually moving the selling level to this higher low, because now this is a higher low because you have a higher high. But this is not a valid short because the same candle that makes the high gives you the entry. Basic rule, I think it's pretty clear. Now, we don't have an entry and we have to wait now to see which type of a structure price builds. Because price is melting, we need some new structure, as you guys can assume. So this candle, bullish, marks up the end of the impulse. So now we have high and low. Perfect. Now we need to see what the price keeps doing. Creates a deeper pullback. Next candle, low. So now we have a high and a low. It's like seeing this. All right, for now, literally we have nothing. There is no entry valid. Perfect. What is this? This is the market going up, then going down and going up again. Long story short, we have a low. Now, important to understand, this low is 231. This low is also 231. So it's basically like the market did this. basically, equal lows. All right, let's see what happens now. Next candle creates a high. Now we have a higher high on the internal structure. Let's say that we have something like this. All right, now although they are equals, this is a first impulse and this is a second impulse. Although this is not a higher low and is an equal low, you still have first impulse, first pullback, second impulse. First impulse, first pullback, second impulse. All right, now we have one valid idea, which will be a bearish BOS. Again, although this is not a higher low, it's an equal low. It's a very important point of the structure, and if the price breaks this, we have a valid bearish break of a structure. Next candle. This candle is bullish. All right, so we have nothing yet. If that was bearish, we will say higher high, second pullback, bullish, rule of the third impulse. But since this is bullish, we have nothing yet, only the bearish BOS. Next candle, bullish, fantastic. Next candle, bearish. So this candle is bearish. Now we have the finish of the second impulse, and in the same candle we have the second pullback. First impulse, first pullback, second impulse, second pullback, and now we have the valid rule of the third impulse to the upside. If you see, this is 8:45. I mean, this is not early on the session. This was a late entry. Next candle, look at this. This is the lesson of the day, all right? Everything we have spoken until this point, we have already seen that on the past videos. But now comes the detail of the trade, the detail of the day. Boom. Candle activates the entry, taps the previous high, but it doesn't surpass the higher high. So it's not creating a higher high, it's creating an equal high. This is very important. When we are live, I always put my buy stops and sell stops exactly at the high and the low. This means that although the market is not making a higher high, it's tapping the previous higher high. Therefore, my idea is active. This is the lesson. I had that question in the beginning when I created this strategy, right? And through backtesting, through a lot of testing, and also obviously through a lot of forward test, I came to the conclusion that this was the best move, all right? This was so long ago. And it's been proving the same thing over and over, that this is the best approach. Obviously, sometimes it will reverse, as always, but overall, it has a better expected value than putting the entry a little bit higher, because that affects to our risk to reward ratio. Sometimes by doing this, the market is tapping the exit and then reversing completely. Imagine if you put the entry a little bit higher, you will need a higher exit level. Therefore, you will have more times when the market reverses even before the exit is hit. So it's very important that all of these things are taken in consideration, and the only way to answer to all of this is through experience, right? With this being said, market eventually skyrockets, and it was a very good ending. Took a little bit longer, all right, but you know, it was a winning trade. So as a summary, today you jumped in at 7:55 into the charts. Entry was active at 8:50, 55 minutes after. So you had a longer trading session today. And then the exit was hit at 12:10. So yeah, very interesting. You had 55 minutes until the trade was opened, 3 hours and 20 minutes until the trade was closed in exit. So yeah, so far so good, guys. With this being said, remember that on the description of the video you have the link to my Instagram. You can talk to me, to my DMs, ask for a free spot on the private group of students, and I will send you all the details. You will have the access to all the live analysis sessions, to all the market ideas on crypto, forex, and other markets, and obviously to the intensive course explaining this strategy from 0 to 100. With this being said, family, see you all on the next videos. Let's get it.